Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to talk about TELUS Corporation stock. A few weeks ago, I released a poll on the stocks you want me to review, and TELUS was the top choice by you guys. So today, I'm going to discuss their business, their future plans for 2023 and beyond, their dividend history, the risk associated with investing in this company, and finally, I will provide a detailed stock analysis using my personal discounted future earnings model, and will then provide you with the fair value of this stock depending on your investment goals. The company HQ is located at Vancouver, British Columbia, and their shares are traded on TSX for almost 27 Canadian dollar at the time of recording this video. They pay a significant dividend with a huge starting yield of 5.2%, and the market cap of the company is around 38 billion Canadian dollar. TELUS provides a range of telecommunications and IT products and services in Canada, ranging from sales of smartphone and smartphone accessories to various data plans, internet, and phone services. TELUS, Bell, and Rogers are operating as an oligopoly in Canada in telecom sector. In very simple words, an oligopoly is a market structure in which an industry is dominated by a small number of large companies which can set the price of a specific services or products and increase their profit margin due to the lack of competition. And this is exactly what is happening in telecom sector in Canada. Basically, every single person that lives in the country have to use one of these three giant telecom providers, I mean TELUS, Bell, and Rogers, for their phone services. This is one of the biggest advantages of TELUS Business. As we increase the population via immigration every single year, these new people have to choose one of these three providers, and therefore all three can reap the benefits and enjoy some growth over time. I should mention that small providers like Quebecor or Eastlink can in theory undercut the big three on price, limiting their pricing power and pressuring their margins, but over time, these telecom giants usually acquire smaller competitors and they grow to an even larger player in the space, just like Rogers that recently tried to acquire Shaw. I'm a customer of TELUS myself, and while the quality is okay, their phone plans are definitely pricey if you stay with them for long term. The best thing you can do is to switch providers every single year to be able to use that promotional rate that they offer, but anyway, it's outside the scope of this video. Important point here is that they are guaranteed a number of new customers every single year due to the immigration and operating as an oligopoly. In addition, they are trying really hard to branch out into telehealth services via TELUS Health Virtual Care. They are trying to establish a virtual platform for medical support and a real-time communication with a medical doctor via chat and video. I never tried this service myself, but it would be nice to know how their app actually works in real life. So if you had any experience with TELUS Virtual Care, let us know in the comment section of this video. In addition to telehealth, TELUS is trying to establish itself as a main source for selling and installation of smart home products like security cameras, monitoring systems, smart sensors, and smart ring bells. Finally, they are trying to enter entertainment and streaming business via their Stream Plus service, which will bundle Netflix, Discovery Plus, Apple TV Plus, and TELUS TV Plus under one subscription feed. Again, I'm not sure about this bundle as I only have a Netflix account, and even then I barely watch any series or movies, so I don't know if this is a good deal or not. Recently, they also announced an agricultural division leveraging their wireless network and IoT, which is this is just like an idea right now. I'm not sure how much it can contribute to the revenue of the company in the future. What is important for me is that TELUS is trying really hard to branch out from cell phone services and internet services into various businesses ranging from telehealth to home security, streaming, and IoT to diversify their income sources and grow their revenue faster. I should also say that this diversification comes with both potential rewards and risks, and these non-core businesses can lower the stability of their telecom business. Okay. So now let's start look at their financial statements and assess their operating efficiency, growth history, debt level, dividend payout, and future outlook. The first thing that I want to mention here is that the return on invested capital in TELUS is not great. Look at these numbers. In all previous years, TELUS return on invested capital was lower than 9%. And in the last year, it was even worse with 5.7% return on invested capital. Even if you look at return on assets or return on equity, the numbers are still not amazing. It means the business is not really that efficient in allocating capital and get a good return on those invested capital. So when we have a business like TELUS with low return on invested capital, I would like to see that they don't take on so much debt because they are not efficient in using debt to grow their business. Unfortunately, the liabilities of TELUS is growing relatively fast, which is a little bit concerning for me, especially when they are not able to generate a good return on these debts. However, we know that telecom business requires a lot of capital expenditures, especially I think the recent fiber optic project cost them a lot of money. So this level of debt, while it is high in general, is normal for a telecom business, in my opinion. Now, let's look at their growth history. TELUS actually was able to grow their top line revenue pretty well in the past couple of years. For example, in 2022, they were able to grow their revenue by 6.7%, which is not that bad. They anticipate to grow their revenue by 11 to 14% and their EBITDA by 9.5 to 11% in 2023 and be able to generate $2 billion of free cash flow. They also see a fast growth in their healthcare business revenue, but we should note that a part of the growth comes from their acquisitions and not organic growth. Their cash from operating activities, telecom subscribers, adjusted EBITDA, and free cash are all growing too, which is great. Overall, I think TELUS was successful in growing their business in the past couple of years. In terms of the dividend history, TELUS has a long history of paying out and increasing its dividend year after year. They actually increased their dividend from almost 99 cents to $1.4 per share in 6 years, which is an almost 7% year-over-year increase in their dividend. This is a respectable record and pace of increasing dividend, and with an already high starting yield of almost 5.2%, this track record is definitely interesting for dividend investors. The main question here is, what is the fair value of TELUS stock? So before estimating the fair value, let's look at the historical valuations of TELUS stock. I think the best way to evaluate a capex heavy business like TELUS is to look at their cash flow and price to cash flow. But even looking at price to sales or price to earnings show you that the current valuation of TELUS is basically in line with its historical averages, and therefore, at least from historical perspective, it seems TELUS is close to its fair value at the moment. This is my favorite part of the video, where I can show you my stock analysis based on financial data I discussed in the previous parts of the video. I use a discounted future earnings model, which basically estimates the value of stocks based on projections of their future earnings. So I make some assumptions about the growth of the company in the next 10 years, and then discount the future earnings per share into the present value of the stock based on my expected rate of return. So I start with the past 4 quarters diluted earnings per share of the company, and then based on 3 different scenarios, I predict the future earnings of the company in the next 10 years. In the bear case, or the most negative case for the stock, the company can grow their earnings per share only 8% in the short term, and then the growth rate will drop to 5% in the long term. Again, I try to be conservative with TELUS as they have capex intensive business and the business do not have a great return on invested capital. I consider the terminal multiple of price to earnings of 18 for this case, which is consistent with historical bear periods for this company. For normal case, I considered a little bit better growth and a terminal multiple of 24, which is the historical average multiple for this company. For the bull case, or the best possible outcome, I consider the business grow by 12% in the short term, and then the growth rate drops to 9% in the long term, and I consider the terminal multiple of 30, which is a bull multiple for this stock. 12% growth is not out of the realm of possibility for TELUS, and the management team actually believes they can grow by around the same number in 2023. I assign a 50% chance to the normal case, a 25% chance to the bull case, and a 25% chance to the bear case. For growth stocks, I usually expect 15% return, and for dividend stable stocks like TELUS, I expect 10% year-over-year return. If I expect a 10% year-over-year return from this stock, the fair value of TELUS is almost 24 Canadian dollar, which means compared to the current share price of almost 26.8, the shares are traded at a 10% premium, which means it's not a buy according to the model. However, it all depends on your expected rate of return. If you are, for example, happy with a 8% year-over-year return, then the stock is currently undervalued and it is a buy. It means if you expect to receive 8% return year over year in the next 10 years, you can probably receive similar amounts of average return if you buy the stocks at this price right now. But if you want 10% return on your money year over year, you should wait, and this stock probably cannot provide that return in the next 10 years. If we look at the analyst expectations, Morningstar has a $32 fair value for TELUS with a narrow economic moat, and National Bank analysts have a price target of $30 for this stock at the moment, which are both higher than the fair value estimates that I did basically in the last section. But remember that these valuations are usually short-term valuations by analysts, which is different from what I'm trying to do here. In summary, I do like the fact that TELUS is operating as an oligopoly in Canada, and this fact leads to a baseline growth in the future for their business. I also like the fact that TELUS is diversifying into new businesses like telehealth. I like the fact that they were able to grow their top-line revenue historically, and I like the fact that they try to return value to shareholders via dividend. But I don't like the current valuation of the stock, I don't like their capital allocation efficiency, and I don't like the leverage and long-term debt on their balance sheet. There you are, guys. I hope you enjoyed the video, and if you enjoyed the video, consider subscribing to the channel to see similar videos. Remember that I'm not a financial advisor, and this video was not a financial advice for you to buy, hold, or sell this stock. This was my personal opinion. You should always do your own research before making any financial decision. Thank you for watching, and I hope to see you guys in the next video. Farewell.